Hi and welcome back to our channel again. Or if you're new here, hi, I'm Antonia. I'm a licensed accountant and small business owner. I own Abacus Jack with my business partner Andy, and our mission is to help businesses feel more financially confident by explaining things to them and working with them throughout the year so they can make better financial decisions using more recent financial data. Today we're talking about something that you'll see every day, and as a small business owner, it might start to creep into what you have to do, and you think, what am I doing? How does this work? And of course, we're talking about VAT. So VAT you'll see every day, even when you're an employee and you have to buy stuff in the shops. Typically in the UK, everything is grossed up. So if you go into a shop, you pay $9.99 for something, at Boots or something like that. The VAT is hidden within that cost, and Boots have to file a VAT return with HMRC and pay the VAT to the HMRC as another tax. It stands for value added tax, and we have to pay it on everything that we buy unless the goods are exempt. If you are in the UK as a small business owner and you have to apply VAT to your goods, then typically the VAT is charged at 20%, and you have to report that to HMRC with a VAT return, and you can deduct some of that VAT to come to a VAT bill, and that depends on the VAT that you've suffered within the month. And it's pretty standard for everybody. It's not something to be scared of, but it can get a little bit tricky depending on what you're selling and making sure that you don't turn this into a big unorganized mess. So to get started properly, Andy, can you tell me maybe a bit more about when do you need to get VAT registered and when this would start to affect somebody?
Hi, welcome to the channel, everyone. So for VAT, the current rules are that when your turnover, so not your profit, but your turnover, hits a £90,000 threshold, then you must register for VAT. But it's also important to point out that what that means is that's £90,000 rolling turnover. So in the last 12 months of doing your business, and that's a rolling 12 months, as soon as you hit £90,000, you need to get that VAT registration in. It's also important to point out that you can register voluntarily at any point. So you start the business day one, you can decide if you want to be VAT registered from day one. And this is really done on a case-by-case basis. We have to say for each type of business that we're looking at, what's the best for that type of business. So we're going to have to look at who the business sells to, what do they sell, so goods, services, are they selling to other businesses, or are they selling direct to consumers? All this will determine, the point at which you register for VAT, whether you do it voluntarily or whether you wait to the mandatory threshold.
So if I had a business and the year end was at 31st of August, for example, and today we're sat here in May, can I wait until after August to see if my turnover has breached that threshold?
No, it's the simple answer to that, and this is what often catches people out. So when we talk about rolling 12-month turnover, we mean that at any point in time, for example, today, we need to look back over the last 12 months and has our turnover exceeded £90,000? And then we keep doing that. We keep monitoring that figure. We hopefully know if we're going to get close to it, because we should be looking at our figures anyway. But we keep monitoring that figure on a month-by-month basis by looking back over the last 12 months. So it's actually not based on your financial year end. It's purely based on a rolling 12-month period. And the other quick point to mention here is that once you realise that you have hit that threshold, you should register for VAT as soon as possible so that you're starting to submit VAT returns to HMRC.
Yeah. And you have to tell people when you crossed the threshold as well. So you have to tell HMRC when you cross the threshold, because that's when they'll backdate the VAT too. So that's why it's really important to keep an eye on it, because HMRC will literally start charging VAT on your sales from that date. And if you're not charging output VAT on your sales invoices from that same day, then you're going to be 20% down on the money that you're receiving. Which is a bit of a risk for a small business too. Do I have to register if I only sell to the EU? And how would that work?
Where you sell your goods or your services and how you sell them is really important when we're talking about VAT. But the actual process of registration is based on that £90,000 threshold. So before that threshold, you can choose whether you register optionally. Once you've hit that threshold, it becomes mandatory, and that's regardless of where you sell your products. There are some industries that are exempt from registering for VAT, for example, financial services, but obviously we'd have too long a video if we tried to cover all the edge cases, so we'll just stick to the kind of standard routine scenarios.
Cool. And for that example, it's interesting then to talk about, is VAT always 20%? Because it's not that simple either, is it? So
like with a lot of taxes, no, it's not that simple, and we'd always recommend you get advice when you're looking to register for VAT, or indeed start providing VAT goods or services. It's not always 20%. It's usually 20% on most goods and services that are sold in the UK to other UK businesses or individuals. But some exceptions would be a lot of food items are zero rated and they do not have VAT on them. Some items are exempt from VAT, such as books, for example. And other items have a reduced rate of VAT. For example, home energy, electricity, gas has a 5% VAT rate. So we can see that it's not a clean cut across the board, and different things that you buy or sell in your business, you do need to be aware of what the correct VAT rate is for those.
yeah, and you can check that using HMRC guidance as well if you need to, if you're not sure. But that brings us as well to different types of VAT schemes. So when you register, you say, I've crossed the threshold, I'm registering for VAT. You'll actually be given a few different options, and you can go on a standard VAT scheme, which means you charge 20% out. If you are, say, like an IT contractor and you have a limited company and your turnover is over £90,000, but you don't suffer a lot of input VAT. So that means you haven't bought a lot of stuff where you've had to pay VAT for the business in each quarter. So you would just get stung with 20% out all the time. The HMRC recognises that isn't very fair. So what they offer in that case is a flat rate scheme. So what that means then is for that IT director, when they have to issue sales invoices to their customers, they still charge 20% to their customers. But what they actually report to HMRC is a lower rate than 20% on a limited cost scheme. So that might be 10, 12%. And the difference is to make up for the reduction or the small amount of input VAT that they would have, so that it's a bit fairer in terms of what VAT bill they have to pay to HMRC each quarter. When the limited company director submits their VAT return, they'll actually make a little bit of a gain because they're charging the 20% and there's a difference between what they're actually reporting. And that actually creates an income which they're then taxed on through corporation tax, which sort of gets you twice in that way. So it's not something that you can get out of easier. Is there any other VAT schemes that people could qualify for depending on what they're doing?
Well, that's really interesting about the flat rate scheme, that you actually, the surplus amount between what you're charging and what you're paying in terms of VAT is a taxable income stream. I can imagine that catches a lot of people out. In terms of different VAT schemes, the flat rate scheme is the main option to look at. The other thing people don't necessarily realise is that you can choose whether you submit VAT quarterly or monthly. There is even actually an annual scheme as well, but most people will go for either quarterly or monthly. There's some real advantages to look at depending on the situation your business is in. And that's because VAT isn't actually a tax on profits. It's a transient tax. So you're collecting it on behalf of HMRC. You're like the tax man, really. So when you're selling your goods and services and you put that 20% rate on them, you're collecting that money in. 3 months later, if you're on quarterly VAT, you've got to give that back to HMRC. So that's why it's a bit like being a tax man. Yes, you get to apply your expenses and your purchases and claim the VAT back on that. But the difference, and for most profitable businesses, it will always be a payment. That difference comes out of your cash flow, and it really catches people out because the money's coming in, the bank balance looks good, and then suddenly 3 months later you've got this bill to pay, your VAT bill to HMRC, and that can have a massive drop off for your cash flow. So the monthly VAT option is not often known about that much, but you can elect to submit monthly VAT returns. So it's basically smoothing out the regularity in which you're having to make those VAT payments, which is much more manageable for your cash flow, and you've not got that kind of 3 monthly drop off. You can monitor what's owed more regularly and with more control. So that's definitely something to bear in mind if cash flow is a bit tight, or you just you want that element of control in terms of when you're paying the VAT back. Annual scheme VAT, I haven't come across a huge amount, particularly with our client base, but it still exists, and you can effectively pay your VAT annually.
Yeah, and I think when you talk about paying your VAT annually or quarterly or monthly, that all leads into sort of like, when are your VAT quotas? So we talked earlier about, when you need to register, and you could cross that threshold throughout any point in the year. What you can do is actually select when you want your first VAT quota to end when you register. And that means if you're a limited company, the best thing to do there is find quotas that line up with your year-end date. And that can mean that your first VAT quota is actually longer than 3 months. It could be 4 or 5 months, depending on how long it takes to get into the right pattern for the VAT quotas going forwards. So that could be something to be aware of as well. And also with your first VAT quota, another thing to talk about perhaps is the pre-registration expenses. So you can go back 4 years, I think it is, for items of stock and goods that you sell that are still in stock at the point of registration, and 6 months for services and subscriptions that you've paid within those 6 months. You can reclaim the VAT before your registration for those as well. So sometimes, if you're lucky, the first VAT quota can actually be a refund, which is nice for cash flow. But then when you get into your regular quotas, it's often that you'll be paying more output VAT, so you will have a bill to pay. And it's just, again, it comes down to this whole organisation. Read your records, be organised with your receipts, and keep an eye on how much VAT you need to pay. And it's not an exact science, but you can kind of see roughly using your systems how much you expect it to be. And based on that, you could start skimming an amount each month into like a little savings pot. How do you find the best tips or the best experiences of good business owners that we see? What do they do when they're VAT registered?
Well, it's important to point out that VAT was the first tax to go through HMRC's Making Tax Digital campaign or programme. So it's a digitised tax. This means you've got to use accountancy software in order to submit a VAT return. So systems like FreeAgent or Xero or QuickBooks will all be accredited with HMRC in order to be able to submit compliant tax returns, VAT returns. So that's the first point to note. The second thing to point out is when you're VAT registered, well, indeed, when you're running any type of business, it's really important to keep good records. So keep track of what's coming in and out of the business. Keep receipts, keep invoices, keep evidence. This can either be uploaded to the systems, and that's a really good digital way of working. The systems will keep a track of your costs and expenses, or keep them somewhere where you can access them should you need to. Because HMRC do check VAT returns, both from a systematic point of view in terms of their internal algorithms, but they will also do random checks, and they'll also sort of look for certain anomalies or certain trends with a company's VAT returns. And all of those things can, in some cases, lead to them requesting for more information. So if you have put expenses through your VAT return and you're wanting to claim the VAT back on those expenses, but you've lost the invoices and the bills, you're putting yourself in a really tricky position because effectively you've not got any evidence of that VAT.
Yeah.
So the best advice I would give to people is be really strict with your record keeping. Use good systems, good processes, and it goes without saying, use an accountant that can help you through this. An accountant such as Abacus Jack, we will remove that stress and that burden of your quarterly or monthly VAT returns because we effectively process your records for you, we check and validate your income and expenses, and we give you a nice, easy to understand VAT report that shows what's gone on in the business and what you're paying back to HMRC, or in some cases what you can reclaim back from HMRC. So an accountant's support throughout the year is really vital when it comes to all taxes, but particularly VAT, because it's often the one that HMRC check up on the most, and it can really catch people out.
Yeah, it's that whole digital system, and it's going to come for income tax next year, but that's a whole another video.
Yes, the tax system is undergoing more digitisation, and I know we've covered videos on the channel about making tax digital for income tax, and as the years go by, we'll probably end up doing videos for corporation tax and other digitisation of tax. So it's not going to stop, it's here to stay, and it all boils down to the same thing. You've got to be organised with running your business, you've got to be efficient with your business records, and you've got to have good systems and processes. And you've got to have a good accountant. So we're here to help our clients, we're here to help with queries, and hopefully get everyone on the right track.
Yeah, that sounds good. And I think we catch people from making silly mistakes, don't we, with like the whole, if you sell something to the EU or if you buy something, like Facebook and Google have got to be the ones that we see all the time that people try and reclaim the VAT on, and you can't, because you can't reclaim VAT on registered companies in Ireland. Anyway, I think we've covered a lot on that today for VAT. In summary, it's not something to be scared of, and it should just fold into your business processes and be something that you have to be aware of and that you do as a business owner. It is quite a tricky system in terms of the complexity, but your business doesn't change that much throughout the year in terms of what you sell. So once you've got the right model for your business, then it is very repeatable and manageable. If you need any help getting to that place with your business, or if you have any questions and you need some support around VAT, then we're here to help you, and you just have to drop us a comment or get in touch and we'd be delighted to speak to you. Thanks so much for watching. Don't forget to like this video if it helped you, and subscribe to the channel for more tips like this, and we'll see you next time.
Thanks for watching.